All right, I have such a great guest today. I have Lynette Zang with me, and we are going to be talking about the U.S. economy, the U.S. dollar, the banking crisis, gold, silver, and many other topics. Lynette, thank you so much for coming on today's show.
Thank you for having me, Stephen. I'm very happy to be here.
Yeah. Well, I've been watching you for years now on Stansberry Research and also on Kitco, and
Mhm.
I've learned so much. And so I've been trying to get with you for a couple of months now. I know you've been traveling and you're very, very busy. So I just want to say thank you so much right up front for coming on my show today. Um, One thing that I wanted to go over with you is I have two areas of the economy that have me very nervous. The first is the banking situation with the
Mhm.
bonds that were purchased at a low rate but are now much higher, and
Mhm.
the other is commercial real estate. So
Mhm.
let me start with the bonds.
Sure.
You know, we have Janet Yellen, bless her heart, telling us not to worry, patting us on the head. Everything's going to be fine. But the reality is, there were hundreds of billions, if not trillions of dollars of low interest bonds that were sold to the American people, institutions, pension programs, and banks. And now those interest rates are higher. How do
Mhm.
you see this affecting the banking industry down the road? And how do you see this affecting us, consumers down the road?
Well, on top of all of those trillions of dollars worth of bonds that were issued, we also have to take into account all of those derivative bets that were issued against those bonds. So this issue is far, 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 far bigger than I think people can even comprehend, likely into the quadrillions. And when a central bank or when interest rates go up, whether the central bank does it or the markets do it, when an interest rate goes up, that means that the market value of those bonds go down. And so the problem with the community banks that have failed recently is that they can hold those bonds on their books either at market. So if it's for sale, which means we can see that markdown, or they're saying they're holding it to maturity, so they keep it at par, they keep it at the value of the bond when it matures, hiding the real risk. So I think we've just had a little sip of the problem in all of the banks, not just the smaller community banks, but even your JP Morgans and your Wells Fargos. Okay, so we've seen just the teeniest little tip of the iceberg on that. So how that really impacts the banks is in their valuation and in their liquidity, right? Because banks are valued based on the assets that they hold. So if there's a market value, there's a Wall Street value, but
Yeah.
truly the bottom line value is based on the assets that they hold. So a huge amount of the assets that they hold are now at losses, and especially if they showed them at market, for sure, they're at losses. That's going to inhibit their ability to borrow more money. It's just kind of like you or me. If our income dries up, if our income is at one level and our assets are at one level and we go to borrow money, then we can get X amount. But if any of that is inhibited, drops down, then we can't borrow as much, right? We also have the issue with the banks on the higher interest rates. Now they have to pay more, they have to pay up for deposits, which has typically been their cheapest source of funding for them to go out and then speculate with your deposits. So we've seen the tip of the iceberg. The banking crisis is not even marginally over yet. We have an event that's coming up the end of this month, which is the end of the LIBOR interest rate benchmark and supposedly the full shift into the new benchmark that was created, the SOFR. But the problem with that shift as well is that the interest on the SOFR is different than the interest on the LIBOR. And those contracts that are credit cards, mortgages, student loans, any kind of debt contracts that were issued prior to 2022 have, well, a huge amount of them have LIBOR in there. Now, some have been able to shift already, but it's dead silent on this regard. So how much more is yet to be shifted? It was pretty steep the last time that they released any information, but the banks are keeping this very, very mum. And that has me very, very nervous. Okay.
You see a situation where the Federal Reserve would maybe bail out the banks because they've kind of caused this problem, or is this gonna hit the American people?
Well, it's going to be both. Even if what people need to understand is when a government does a bailout or a central bank does a bailout, whose money are they using? They're using taxpayer money. And it's ridiculous for them to say we're not using taxpayer money. It's a lie. But their job is to keep everybody calm and keep them inside of the system so they don't make different choices. Because here's what's really happening, that, people don't, I really, not that I have a whole lot of time to listen to a whole lot of people, so I'm not saying I'm the only one that's talking about this. But even in my sphere, and I have such high regard for a lot of people, what I seem to know that they don't, and it's because I've been studying it since 1987, is we are at the very end of this currency experiment's life cycle. And like everything, we all have a life cycle. My 9-year-old granddaughter is at a different point in her life cycle than I am at 68. And when you look at her, you're not going to think, oh, maybe she's 68. You're going to know that she's very young in her life cycle, just like you're looking at me and you're not thinking, maybe she's 8 or 9 years old. So it is recognizing what's happening. So a lot of the turmoil that you're talking about in the bond market and specifically in the treasury bond market, which is key since, as you know, that underpins the global financial system, and how that impacts the individual are keenly tied together. Because this government and this central bank, they're trying to maintain control and power, but officially, if you go on the FRED, which is one of my favorite websites, the Federal Reserve Education Department, and you put in the search bar, purchasing power of the consumer dollar, that tells you everything. Because even with them jury rigging the numbers, officially, we are at 3 cents, and what you see is a continual decline in purchasing power. The way that the individual knows this is through inflation. So even though we got a lower overall read of inflation just recently, has it gone away? No, and it's compounding. And the reality is the Fed is between a rock and a hard place, because if they don't raise rates, that just adds more fuel to the inflation fire. And if they do raise rates, that just takes us closer to the next crisis, which really they've already popped that debt bubble that, frankly, they've been growing since the early 80s with Paul Volcker, when he ratcheted up interest rates to 21.5% intraday. And then you can see, again, go to the Federal Reserve Education Department's website and put in Fed funds rates, and you will see that decline in interest rates all the way down. And every crisis, they lower interest rates, 5.5% to 5.75% to get people to borrow and spend. So when you talk about a Fed pivot, first of all, this whole system is a Ponzi scheme, because money is created and supported by the ability to create more debt. So they have to have confidence. And the markets no longer have confidence in the Fed. Where is that term, don't fight the Fed? Well, look at the markets. They're fighting the Fed because the Fed gave up their credibility to the markets last August, almost a year ago, when they kept promising to maintain the rate at 50 basis points, they were going to raise the rates, and then they did 75. And at the time I said, oh my God, I can't believe they're that stupid to give up that key piece of credibility. And now if you listen to the talking heads, something around the Fed or global central banks' credibility is coming up almost on a daily basis. I hear it. So the public confidence is the only thing that's holding this mess together, but they cannot hold it together forever, especially with the bursting of the bond bubble. So how does it impact the people? Hyperinflation. If you have all your money in fiat money assets, stocks, bonds, annuities, intangibles, then, even as they go up, I mean, look at Zimbabwe, market's up over 600%, but that's because the people are trying to get away from the crumbling value of the currency, right? But 1 trillion times 0 is 0. Okay.
Okay, so who do you think is ultimately, as we come to the end of this currency cycle, who is going to be the killer of the US dollar? Is it going to be the toxic behavior of Congress and the Federal Reserve colluding together? Or is it going to be the strengthening perception of China? Or what do you think will be the ultimate killer of the US dollar?
Well, I think the ultimate killer, it's really been dying since the end of 2002 when the Federal Reserve first started buying government bonds. So already once they did that, we knew globally we were not having enough buyers to buy all the debt that we were issuing. Now it's speeding up. And I don't really think that it's so much China, but the IMF, the International Monetary Fund, back in '69, they created the mechanisms to take over as the world reserve currency. And they started testing those mechanisms in 2009. And one of the things in there is the substitution fund. So we've already seen, frankly, a major decline in the use of the dollar on a global basis, with a lot more countries making bilateral trade agreements to use their own currencies and bypassing the dollar. So the dollar denominated holdings like other treasury bonds or cash, et cetera, I think that that we've already lost the confidence of the world and the transition is underway. But all other countries would need to do is to deposit their dollar holdings into what the IMF calls the substitution fund. And then they can wash it and convert those dollar denominated holdings into SDR denominated holdings. And of course, the SDR is just the currency. It's a fiat currency made up of a whole basket of fiat currencies, which they can include the whole world. So it makes sense to have that become the world reserve currency and then just have local currencies like we do now. I mean, I just got back from Europe and I had to convert dollars into euros so that I could use them there, right? So that's not really such a foreign concept, but I don't see another country taking over as the world reserve currency. I see China's rise of influence. I definitely see them showing the world how to control a population, enter in CBDCs and a full surveillance economy. That makes me quite uncomfortable. But I think the entity that's going to end up prevailing as far as having the world reserve currency is most likely the International Monetary Fund, whose members are almost all of the central bank chiefs and treasury secretaries, no elected officials, right? Technocrats that will be running everything if we let them.
Yeah.
I mean, I don't think that's a given. Do you?
Well, COVID scared me how much freedom people just gave up. Oh, no cash, no this. I won't have a job without a shot. I won't go to church. I won't go to school board meeting. Like it really shook up the entire world really, really quickly. And, I lived in Utah where we reopened in May of 2020 and life was pretty normal. But when I would travel to California for work, it was like I was going to a foreign nation. I was absolutely flabbergasted by how quickly the people complied to government mandates, even while the governor himself was completely hypocritical, traveling multi $10,000 vacations, government meetings in Hawaii, going to $1,000 a plate meals with no masks on. I mean, the hypocrisy. Anyway, sorry, I got off on a tangent there. The point is, COVID showed me how quickly they could use fear to grab people and control their
100%.
behavior.
Well, 100%. But I'll tell you what gives me a little bit of hope around that is actually China, because the people started to protest. There was, and I think was all a big test. How far can we push people? And they do use fear. Never let a good crisis go to waste, right? So yeah, for sure, they totally do use fear. And this next crisis that's coming up is going to be the scariest of them all, which is why it is critically important for people to be as self-sufficient and independent and have physical gold and silver outside of the system. But you also have to have food, water, energy, security, as well as barterability, wealth preservation, community, and shelter. Because if you do not have those things in place, when the poopy really hits the fan coming up, and we're not that far from there, right? Then, I mean, do you remember what happened in March and April of 2020? Grocery store shelves were bare. She says she didn't, but this is true. Jacqueline called me up frantic because she couldn't find toilet paper. Frantic. I had plenty because, I started really prepping in 2008. I knew the system died because I've been studying currency life cycles forever. And, it scared the crap out of me. I was glad that they put us on life support to give me an opportunity to get ready for this. So in March of 2020 in April, I'm walking around my urban farm, and I'm not a farmer by nature. I'm going to own that title now. But back then, I wasn't a gardener. I wasn't a farmer. That was not my thing. But I knew that food becomes the single biggest issue for people as we transition from one currency system into another one. And hasn't the World Economic Forum telling us we need a complete global reset socially, economically, and financially? Well, believe it. I've been talking about the reset ever since I heard Christine Lagarde, which that audio has subsequently been deleted. But in a Bloomberg interview in a half an hour, she probably mentioned the word reset like 30 times or something. It was ridiculous. It was so obvious. And I went, holy crap, this is it. So, the public needs to get ready for this. Arguably, your foundation needs to be in wealth preservation, because if you are sitting with those fiat money assets and the value of that currency gets hyperinflated away, trillion times zero is zero. Sorry, but that's just a fact. And that's how they transfer the wealth, is by getting you, it's called perception management, getting you to position the way they want you to position. So if you hold all your wealth inside the system, it's so easy to steal. Look at the trading halts. Look at, look at these REITs saying, nope, sorry, no distributions. Look at the gates and the different things that they put on money market funds where people think they're like a savings account. But if a lot of people want to get their money all at once, guess what's going to happen? The answer is going to be no. And what are you going to do? Who are you going to yell at? Who are you going to talk to? What door are you going to pound on? It doesn't matter. We have been transitioned into primarily an intangible society, getting us used to that. But I got news for you. There's somebody that owns every single asset on the planet. Wealth does not disappear. It merely shifts location. So if you have a real money that is not tied to this debt bubble, which is gold and silver, then you're in a position to take advantage of the opportunities present. Why do you think global central banks have been loading up like gold on gold, like the highest levels ever since 1967? What was happening then? Oh yeah, we were transitioning from a gold-backed currency to a debt-based currency. Who do you think knew that? The central banks.
Yeah. Yeah. Wow. The thing that scared me was the masses were really worried about toilet paper. But then like a year and a half later, it was the mothers who couldn't get access to baby formula where I really saw the panic. You can clean your bottom different ways, right? You can only feed humans one way, right? You can only feed babies one way. So you had people all of a sudden, they're paying $200-300 for a can of formula because all of a sudden the supply demand got way out of whack. Now imagine if they did that with all of the food that we have, access to bread, things like that. That's where I think this thing would really open people's mind, is this all of a sudden their access to food got cut off. Now, speaking of bread, oh, go ahead.
Well, I just wanted to correct you because I'm a mother of twins and I did not use baby formula. I used myself.
Yeah, there you go.
And when my daughter had her son, he would not nurse. So we got goat's milk.
Oh, okay.
So there are, and you know, that's a good point to make, right? Depending upon your circumstances, where you are, what you have to work with, there are lots of alternatives that you can create that food security, whether it's baby formula or, to your point, you know, the food that we need to eat to keep us alive. So I became an urban farmer and now a farmer in general because I have 2 farms.
Oh, wow. Good for you. Okay. Sticking on the topic of bread, and then we'll wrap this up. You've given in other interviews an example of how gold preserves wealth better than fiat currency.
Oh,
and
yeah.
you use bread as an example. Would you mind sharing that as we wrap up with my viewers?
Oh, absolutely. If we go back to 1913, when this experiment started, if you had a $1 gold coin, which is a 1/20th of an ounce, maybe half the size of my pinky fingernail, where you had a $1 silver coin, where you had a $1 silver certificate, you could have bought 11 loaves of bread with any of those, the 3 of them. If you go to today, and not exactly today because I didn't do the calculations, but I'll get you pretty close. You can get maybe a third of a loaf with that dollar bill. You can get roughly 11 loaves of bread with this 1 ounce silver coin, but you can get about 135 loaves of bread with that $1 1/20th of an ounce gold coin. I mean, it holds its purchasing power. That is the single most important function that money was supposed to do. But fiat money, that dollar bill, by design, if you go back to when they were creating it, they knew that not one man in a million understood inflation, and that inflation creates what's called nominal confusion, because the government wanted to be able to tax you without you knowing about it. So there's that inflation tax that we hear about. Corporations wanted to pay you less, but knew if you were used to getting $10, you weren't going to accept 5. If, however, that $10 spent like 5, well, look at all the income and wealth inequality. So this system, by design, was created to rob you of what you really have, which is your work, your time. Gold prevents that. And historically, I mean, we've got thousands of years to look at. So yes, they suppress the price. So people might say, well, how come gold prices is so much higher? Because it's really simple. A rising gold price is an indication of a failing currency. And when you really understand that this currency, this fiat money that they can print at will is dying, then you start to make different choices. This is good money. And the other point that is so important that I never really hear anybody talk about it is, why has gold and silver never, ever, ever gone to zero? Because fiat money in stock markets and bond markets, they can't say that. They've gone to zero over 4,800 times, but gold and silver hasn't. You know why? Because they have the broadest functionality and the broadest base of users. Physical silver and gold are used in every single sector of the global economy. Used in finance, used in art, used in food, used in engineering, used in space travel, on and on and on and on. So when you're going into a fight, and we are entering a fight for your freedom in your life and your choices and your children's, right? What do you want? You want something that's only accepted in one place, the financial, and so when nobody trusts it, that's it, it's done. Or do you want a flipping arsenal? May go up, may go down. True supply and demand, not on the spot market, because they can create as much silver and gold as they want. But in the physical only realm, oh yeah, we're seeing premiums rise, we're seeing prices rise, regardless of what happens on the spot market. So just think about, I mean, I think that is like the most important thing that nobody ever talks about.
Yeah, no, absolutely. I remember reading one time where the gold and a $20 bill like 100 years ago were basically equal, and now $20 buys you one little sack of pathetic groceries. Meanwhile, a gold coin is worth like $1,950. I mean, just in 100 years, the difference. One of them can continue to buy you, dozens and dozens of loaves of bread, and the other one can buy you a quarter of a loaf. And who's going to sell you a quarter of a loaf? So anyway, this has been really, really fascinating. I didn't get to my other question, but we've run out of time. I'm going to hold it and have you back on the show.
Absolutely.
But it's about all of these companies that are purposely skipping their lease and mortgage payments in San Francisco. So we'll talk more about that. But if people want to get more information, they should follow you at ITM Trading on YouTube, as well as Beyond Gold and Silver.
Right, because you've got to have your foundation, which is gold and silver, but you've got to have more than that too. Food, water, energy, etc. That is the whole mantra, and that's what we talk about on Beyond Gold and Silver. And then we also have the Thrivers community, which is a community of like-minded people that see what's happening, because a lot of times people feel alone. You're not alone. So we're building that community, and yeah, that's how they can find me. I've been doing this on some level since I was 10 years old. That would be 58 years.
Wow.
I have roomed for this moment in time, no doubt about it.
Well, I appreciate you coming on and sharing your wisdom and your time with us. It's your most valuable asset. So thank you so much. And I hope that you have a great rest of your day.